Ever wondered what the market looks like when you stop chasing trades and start mastering time? Welcome to the 714 method, the revolutionary approach founded by Mashaya that flips the script on how we understand the market. In today's video, I'll not only break down how this method works, but we're also backtesting last week's market to show you exactly how it could have played out. No fluff, just actionable insights and game-changing strategies. So grab a pen, a notebook, and maybe even a coffee, because we're about to level up your trading game. Let's dive in. Alright, here we are looking at the chart on Monday, the 20th, and the first thing we need to do is scale down to a 5-minute chart because this is a scalping strategy. Scalping is all about catching those short-term opportunities, and the 5-minute chart gives us the precision we need to make quick, informed decisions. Now, before we dive in, let me remind you, this is a time-based strategy. That means patience is key. I can't stress this enough, patience. We're not here to force trades or chase the market. We need to wait for the price action to play out until 1 p.m., which is the critical time for this strategy. Of course, I know some of you might feel tempted to jump in and trade before 1 p.m., and that's totally fine. You can take a few trades if the setup is clear. So, if you're trading before 1 p.m., make sure you're managing your risk and sticking to your rules. Now, once the clock hits 1 p.m., it's game time. The very first thing we're going to do is draw a vertical line right at 1 p.m. on the chart. This is going to be our reference point moving forward, and everything we do will revolve around what happens from this moment onward. Here's how it works. If the price becomes bullish from 1 p.m., meaning the market is pushing upwards, we're going to start looking for selling opportunities. Why? Because we're expecting the market to eventually reverse, and we'll position ourselves to take advantage of that. On the other hand, if the price becomes bearish from 1 p.m. and starts moving down, we'll be looking for buying opportunities. Again, this strategy is built on anticipating reversals and using time as a key indicator. These are the basic rules of the 714 method. Sounds simple, right? But don't underestimate it, it's this simplicity that makes it so effective when applied correctly. Now, here's the thing about this strategy, it's not about rushing into trades or taking setups just for the sake of it. The 714 method teaches us to read the market through time, not emotions. And that's where discipline and patience really come into play. Now that we've marked 1 p.m., the next step is to observe what price does. Does it turn bullish or bearish? This will guide us in looking for selling or buying opportunities. After watching for a while, we notice that the price is just consolidating, stuck in a channel with no clear bullish or bearish structure. In situations like this, the rule is simple: we don't take any trades. Why? Because trading in uncertainty is risky. The 714 method is designed to keep you disciplined, trading only when conditions are clear. If the market gives no direction, we step back and live to fight another day. There will always be another opportunity tomorrow. Let's move on and see if the next day brings us a clearer setup. So, here we are with our vertical line already drawn at 1 p.m. Now let's observe whether the price becomes bullish or bearish. In this example, it's very clear that the price is bullish, the market is pushing upwards. With that in mind, when the price reaches this area right here, I would have entered a sell order, anticipating that the price would react to this level and possibly push back to the downside. Now let's see what happens next. As we can see, the price hit our stop loss and continued moving upward, completely invalidating our setup. But here's the important lesson: taking a loss does not mean the strategy doesn't work. Losses are a normal part of trading, and if you've been following this channel, you've already seen how powerful the 714 method can be in other examples. It's all about sticking to the process and managing risk, even when the outcome isn't in our favor. Now let's shift our focus to Wednesday, the 22nd. By 1 p.m., the price clearly appears to be bearish, and I noticed that it previously rejected this area. Based on that, I anticipate the price might reject this level again and push back to the upside. With that in mind, I place my buy orders right here and set my stop loss just below the wick for protection. And, as predicted, the price pushed up beautifully, marking a successful trade for the 714 method. Now, before anyone comes at me saying, "This isn't how you're supposed to trade the 714 method," let me clarify, this is how I personally apply this strategy. You're always welcome to learn directly from Mashaya if you want to stick strictly to his approach. But as with any strategy, it's important to adapt it to what works for you. Now, let's jump to Thursday, the 23rd of January, and see how the price played out on that day. After 1 p.m., we noticed that the price became bearish, which is exactly what we want to look for when setting up our trades. Normally, in this situation, we would place buying positions around this level, expecting the price to bounce back to the upside. But here's where things get interesting, the price went slightly lower than expected. Now, you might be thinking, should I exit the trade? But here's the thing, this is where your ability to adapt comes in. To avoid being stopped out, you need to accommodate the most recent areas of interest. If you zoom out on the chart, you'll notice that there's another key area where the price had previously rejected and reversed, driving the market to the upside. This is crucial because, in situations like this, where there's another area of interest close by, you need to adjust your stop loss just below that level. By doing this, you give your trade more room to breathe and avoid the risk of being stopped out due to minor price fluctuations. And what happens next? The price bounces back, validating our setup. This is the power of the 714 method in action, being able to spot these key levels and adjust your strategy accordingly to give yourself the best chance of success. So, remember, when you're faced with a situation like this, don't panic. Zoom out, check for nearby areas of interest, and adjust your stop loss accordingly. The market always has a way of showing you the right opportunities if you're patient and observant. And with the 714 method, you're always prepared to take advantage of them. Now, let's take a look at the Friday chart. As we can see, after 1 p.m., the price clearly became bullish. We see that upward movement. Now, remember, when we see a bullish movement like this, our job is to look for selling opportunities. Why do we look for sells when the price is moving up? It's because, based on the method, we're anticipating a market reversal. So, as the price pushes up, we prepare ourselves for that potential downside move. And, as it turns out, the price respected our setup, confirming the trade and marking a third win for the 714 method. It's always great to see the strategy play out as expected, showing that sticking to the plan pays off. This setup is a perfect example of how the 714 method allows us to capitalize on market reversals and ensures we stay disciplined, no matter what the market does. It's a proven approach, and when used correctly, it consistently delivers results. Now, let's analyze the chart for Monday, the 27th of January. As we can see, the price was clearly bullish after 1 p.m., which, according to the 714 method, means we're now looking for selling opportunities. As we continue to observe, the 714 method does not disappoint. Just like we've seen in previous examples, it helps us identify these setups with precision, and sure enough, the market moves as anticipated. So, that wraps up today's analysis. If you've been following along, you can see just how effective the 714 method can be when applied correctly. It's all about patience, discipline, and following the rules. If you stick to the process, the results will speak for themselves. Thanks for watching. Be sure to like, comment, and subscribe if you found this helpful. And remember, trading is all about consistency, so keep practicing, and stay tuned for more insights. See you in the next video.